Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're coming at you with some earnings releases from Trulieve, Vireo Health, and Aurora Cannabis. So before we jump in, if you enjoy this video or you learn something, please just leave a like on it as it really helps out my channel. And of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos. And there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so that you can learn about the budding industry, identify solid companies that you see continuously popping up, and then take advantage whenever you are ready. And as ironic as it is, the lower that these share prices fall, the more attractive these companies honestly become to any new investors. And no doubt, if you're long this industry, it's very difficult to see the share prices falling. But if you have cash, this is the time to be reinvesting, buying the dips as much as possible, because as Ben Graham says, in the short term, the market is a voting machine, but in the long term, it is a weighing machine. And that is why fundamentals do matter, especially if you're long any industry. So Trulieve reports first quarter 2021 revenue of $193.8 million, with net income of $30.1 million and adjusted EBITDA of $90.8 million for their 13th consecutive quarter of profitability. No doubt, Trulieve is the most profitable MSO. Some are growing quarter over quarter or year over year more quickly. Others are growing their revenue more quickly, but Trulieve is making the most profits from their operations. So that is something worth noting. Achieving their quarterly record revenues of $193.8 million, a sequential increase of 15% over Q4 2020, generating positive net income of $30.1 million. Positive adjusted EBITDA of $90.8 million, the most of any MSOs, achieved gross profit of $135.3 million and gross margins of 70%, which is disgusting for any industry, disgusting in a good way, and delivered $60.4 million in cash flows from operations. So, other highlights that they managed in this quarter, obviously buying Harvest Health and Recreation. That deal will go through probably in Q3, so think of that as the fall of this year. But after Harvest reports record quarter revenue of $88.8 million with a positive adjusted EBITDA of $26.9 million. And again, that large footprint in a recently legalized adult use state, that's a big advantage. And on top of that, they managed their first full quarter of operations in Pennsylvania and opened phase 1 of their new cultivation facility, adding 45,000 square feet for a total of 80,000 square feet of cultivation. They've also become a first mover in West Virginia through successful application wins and the recent acquisition of Mountaineer Holdings. Plus, they've continuously expanded their operations in Florida, adding 8 new stores and 116,000 square feet of cultivation, ending the quarter with 78 stores and over 2 million square feet of cultivation in Florida, reiterating that although they already practically own Florida, there's still a lot of growth to be had, considering that there's 21.5 million people and only 551,000 medical patients in the state. Plenty of room for growth. So during Q1, we continued to execute on growth in Florida as well as our national expansion hubs, as was covered before previously. Now, if we get into the numbers, total revenue did increase from 168.4 in Q4 of 2020 up to 193.8 in this recent quarter, which is a 15% increase sequentially, 102% year over year from Q1 2020 to Q1 2021. And I think the most important thing to highlight here is their gross profit increasing year over year from 73.8 up to 135.3%. This is just gross profits, with gross profit margins of 70%, which is so healthy for any industry. I mean, in fact, they were even healthier last year, but because they're expanding, they're spending a bit more money into that. Their operating expenses, $57.3 million, up from $52 million last quarter, so a bit of 10% growth. And year over year, 97% growth. So obviously they are spending more as they are continuing to expand, but incredibly enough, they've kept their operating expenses to just 30%. So they're doing a very good job at keeping their operating expenses low and making sure most of their revenue does go into profit, which is impressive. Net income, $30.1 million, up from $3 million last quarter, a percentage increase of $889 million, which is pretty impressive. Obviously not as big year over year, just because certain times of the year they're spending more on expansion as they realize that they need to do that. But nonetheless, great to see positive net income and a positive adjusted EBITDA, $90.8 million, up from 81.4%, healthy 87% growth from Q1 of 2020 over to Q1 of 2021. So gotta love to see that out of Trulieve. And if we look at some of their profitability numbers, I think one thing to highlight here as an MSO compared to any Canadian company is that for the most part, all of these numbers are positive. They're not losing money anymore. Although they've seen some of this, the percentages decrease, Trulieve is not losing money in any sort of aspect. So this really separates the MSOs from any Canadian LPs. And they've got very healthy balance sheets, and I think the main highlight here is, again, a lot of cash coming in from operations. They're literally creating cash, which is the whole point of a business, a profitable business in time. So love to see that out of Trulieve, and this does make me, as someone who owns Harvest shares that are going to be converted into Trulieve, I'm going to sell some of them to get some cash out and try to buy the dips that we've seen this past week. I was a bit sleepy yesterday, and I missed getting into selling some Harvest shares and getting into Cresco under 14, but hopefully I'll be able to do that later today. Otherwise, it's cool knowing that I will own Trulieve in time, and that does, as someone who loses a bit of that Harvest deal, I do feel like I'm making it back with eventually owning the most profitable MSO. But on to a smaller cap MSO, Vireo Health announces first quarter 2021 financial results. Q1 GAAP revenue of $13.2 million increased 9% compared to Q1 2020. Excluding their former PA Pennsylvania subsidiaries, Q1 revenue increased 30% year over year and 14% sequentially, with gross profit margins of 42.6%, which I do like to see as a Vireo shareholder, reflecting improved efficiency and operations across core markets. So that is something that you do like to see as an investor, gross profit margins higher than lower. Our first quarter results are consistent with the trends from last quarter. We continue to see double-digit sequential revenue growth, excluding our former Pennsylvania subsidiaries, and substantial improvement in our gross margins due to our focus on operational efficiencies, said Chairman and Chief Executive Officer Kyle Kingsley. Wholesale performance in Maryland was temporarily impacted by the move to our recently completed 110,000 square foot cultivation facility in Massey, but our increased scale in this market will drive stronger revenue growth and profitability in the second half of the year. So the outlook is looking more positive for them. The phase 2 expansion projects we discussed last quarter in Arizona and Maryland are underway, and our teams are now aggressively focused on finalizing our expansion plans in New York. The recent passage of adult use legal legislation in New York and New Mexico has improved our outlook for both of these markets, and further potential for regulatory change at local and federal levels could meaningfully impact the trajectory of our performance. Now, I am a Vireo shareholder. Main reason I want to own them in the long run is for New York and New Mexico, but I will admit, considering I started buying them a bit late, I definitely could have sold for profit, and I am holding decent bags now, but that's okay. I am going to hold Vireo long, and I do think that in time it's going to recoup, but obviously that just means that getting into them now is a better deal than when I got in, mainly highlighting the fact that they have very little growth, but the growth rate now is not what I'm looking forward to, right? What I'm invested in, I've highlighted this in past videos, is for their future ability in New York and New Mexico, two markets that have just legalized for adult use. So let's get into the numbers though. Their GAAP revenue was $13.2 million, up from $12.1 million of a year ago, 8.8%, which is not a whole lot of year-over-year growth compared to other top-tier MSOs, but of course, it seems like Vireo is focusing on optimizing their systems and making their systems cost-effective right now, so that in time, once they can get into New York and New Mexico and those markets open up whenever the legislation's ready, that's when they'll see a lot of growth in time to come. Now, their gross profit did increase from $3.3 million up to $5.6, an increase of 71.3%, which is nice to see. And especially nice to see is their gross profit margin increasing from 27% of revenue to 42.6% of revenue. Gross profit margin, you always want to see that going up, especially in any company that you want to hold long. Now, their SG&A expenses did increase from $6.9 million to $8 million, and they did not manage a positive adjusted EBITDA, but that is the cost of expanding into, again, these states that will allow you to grow more in the coming years. So the total revenue, we just highlighted that. Gross profit increased from $2.3 million to $5.6 million, or 42.6%. I think that is the main highlight, at least as an investor in Vireo. On top of the closing of its previously disclosed purchase of 4 cannabis licenses in Nevada. These licenses allow for the cultivation and production of cannabis products for both medical and adult use purposes. So this does expand their footprint into a state where they again allow medical and adult use already, which is an accelerator for growth. But on top of that, it seems like most of their operations have gone to expanding cultivation facility, which doesn't seem like they're spending too much to do that right now. Again, as a small cap company, not a whole lot of growth, but it seems like they're preparing for it. And again, I like their footprint. I like that they're in New York and New Mexico, mostly New York. That's going to be a fast growing space. But if we're going to get into the weeds, let's just take a look quickly. They do have a lot more cash now than they did before. Last year at this time, they had $25 million. Now they're up to $4.5 million in cash. And as we can see, their total current assets, $58.6 million. And total current liabilities, $24.12 million with very little long-term debt. So for the next 12 months, Vireo is not going to need to raise any money, so they should be fine with just continuously cutting costs and hopefully increasing their revenue. While New York lawmakers figure out how they're going to get New York started sooner than later. And then on top of that, though, I just wanted to highlight their revenue increase from $12.1 million. If we look at the breakdown, up to $13.1 million, but look at their product cost. They actually spent more to produce these sales last year, 2020, last Q1 2020, $8.7 million, whereas this Q1 2020, they only spent $7.6 million. So that's helped them keep a large portion of their gross profit, but it just means that they are cutting costs, which you do want to see of any company. Obviously, they did suffer a bit of a loss from operations as they're still in the early stages, but wanted to highlight that although the numbers and the growth is not as big, it just depends on what you're investing in a certain company for. And long term, I think it is just showing that Vireo is on the right track that they were intending. Now we're going to jump over to Canada and show some Aurora Cannabis highlights from their third quarter results for 2021. Now, this is what they chose to put in the header so that anyone that just clicks on it is going to see these things, or these highlights. Domestic medical net revenue steady at $26.9 million. All right. Strong international medical net revenue of $9.4 million. Total cannabis net revenue, excluding provisions, of $58.4 million. Business transformation plan continues. Management expects to deliver incremental cost-saving measures of $60 million to $80 million annually, okay? Remember this. Cost-saving measures of $60 million to $80 million annually. Balance sheet remaining strong at $525 million in cash on hand. And bringing on some new people to the board. Now, I just want to go straight into the numbers because that's where it's just easiest to kind of break things down with Aurora. And what this cash flow statement tells us, it literally just screams, do not invest in Aurora because all they do is dilute shareholder value. And I'll show you what I mean by that. So if we look at their cash at opening and then their cash at ending, we can see that in Q3 2020, so this is last year, four quarters ago, 12 months ago, they had $201 million of cash on hand. Now, most companies with that would try and figure out ways to find a return on investment with it. Instead, what does Aurora do? Let's raise $206 million in equity, further diluting our current shareholders. So they go ahead and do that. And this brings us to Q2 2021, which is last quarter, 3 months ago. We've got $133 million left from that dilution. What should we do? Let's raise another $379 million from investors and further dilute our current shareholder equity, which brought them up to $434 million in cash at the end of Q2 2021, 3 months ago. Then, at the end of this quarter, they're at $434 million because of what they raised last quarter. What should we do? Let's raise another $172 million and further dilute our current shareholders, bringing their cash up to $520 million. Did they make any of this cash from operation? No. Essentially, the executives just basically got to exercise any of their options, I don't know that, so I shouldn't start with saying that. Basically, though, what this means is that the executives, the badly run managers of this company, are entitled to continue to get paid as long as they hit certain benchmarks, which I imagine that this helps them get to, at the expense of current shareholders. So this is what you want to be aware of, companies that do this, and that sadly, if you invest in them, you're just going to see the price drop because they do not work in the best interest of their shareholders, what they're supposed to do, or which they're supposed to do. So if we break down their revenue, we look at their total net revenue. This quarter, Q3 2021, they brought in $55.1 million, but that's down 25% from what they did a year ago, $73.5 million. And from last quarter, Q1 2021, down 18% from $67.6 million. So obviously this is a trend Canada-wide, but you do not like to see this because typically you're investing long in any company. If they're not growing their revenues, they're going in the wrong direction. They're going down. If we look at their medical cannabis net revenue and then their consumer cannabis net revenue, so medical is what they sell in Canada and international, and then consumer cannabis is just recreational in Canada. They did increase their medical cannabis revenue to $36.3 million, up from $31 million, a 17% increase, which is great to see. But compared to even last quarter where they did $38.8 million, that's down 6%. And then in Canada, their rec sales, this is the most disastrous. Down from a year ago, $38.5 million, they brought in just $18 million, 53% decrease. And compared to last quarter where they did 28.5, it's a 37% decrease. So not sure whether they're not getting their product into stores or their brands are not selling, but that is pretty disastrous in any company. You do not want to see that in their revenue state or on their comprehensive income statements. And so if we look at their SG&A, it seems like they are spending less money, which is good, on their sales, general, and administrative costs. But their adjusted EBITDA, negative $24 million, is less than negative $45 million. But obviously, these are the profitability markers, so you want to see those move into the positive direction. And if we look at their balance sheet, their working capital, again, we highlighted this, up to 642 from 429, but it's because they just raised almost $500 million in equity. So none of this is from operations. It's just diluting current shareholders. And then lastly, their total assets. I think this is a big one to look at. Q3 2021 down to $2.8 billion total assets. From Q3 2020, a year ago, $4.69 billion in assets. Where did $1.8 billion in assets go? I don't know. I'm bamboozled. I'm shocked. So that's a decrease of 40%. 40% of their assets gone in a year. To what? I have no idea. If you know, let me know in the comments. But I'm just grateful that I sold my Aurora shares in 2019 and never looked back. Just because, damn, yes, this is a poorly managed company. So I wanted to highlight all that for you. That would explain why their shares dropped so badly post-market. But obviously, again, the opportunity is in the US, where the population is, where the growth is. And although there is hope for a few select Canadian LPs out there, the rest of them are just falling knives. So, wait for them to drop as far as possible before you even consider touching them with a 10-foot pole. Now, on to some good news, though. Just some takeaways before the weekend. GOP Senator who trashed cannabis banking amendment years ago is now co-sponsoring the reform bill. What do you know? Someone is following the money. In the latest sign of shifting attitudes in cannabis policy in Congress, a Senate bill to protect banks that service state legal cannabis businesses gained a notable co-sponsor on Wednesday. Susan Collins, the Republican senator from Maine, who is well known as a centrist, signed on to the Safe Banking Act. This move is particularly notable given that just a few years ago she spoke out forcefully against a similar proposal because she didn't want banks to essentially finance dealers of recreational cannabis. To that end, the latest co-sponsorship may be a bellwether for the legislation, signaling that, like its House companion, it stands to earn bipartisan support if advanced to the Senate floor. Back in 2015, Senator Jeff Merkley introduced an amendment to a funding bill that would bar federal regulators from using their resources to penalize banks just because they provide financial services to cannabis businesses operating in compliance with state law. Collins spoke out at the Appropriations Committee hearing saying, "I just want to make sure that members of this committee understand that this amendment is different from the one that many of us supported in the past to shield state medical cannabis from federal interference because it also applied to recreational firms. So it is allowing banks to essentially finance dealers of recreational cannabis," Collins said. "I think that's very different from medical cannabis, so I'll be opposing this amendment." Okay, Susan, so your ability to pick favorites should override other states' laws that you don't even reside in. Yeah, okay, delusional leadership right there. But what happened in the years since to lead Collins back to essentially the same proposal as a standalone bill? Well, most notably, of course, is the fact that Maine voters legalized cannabis for adult use, so more businesses and constituents in her states now stand to directly benefit from its enactment than was the case in 2015 when Maine only had medical cannabis on the books. But it remains to be seen if her embrace of the modest reform signals that the moderate Republican would back more comprehensive legislation, such as a bill to end federal cannabis prohibition. Marijuana Moment reached out to Collins' office for comment, but a representative was not immediately available. It literally took cannabis becoming Maine's largest agricultural commodity for Senator Collins to support the Safe Banking Act, said political director of NORML Justin Streekel, referencing recent sales data. Unfortunately, she is yet to oppose the policy that labels Maine's farmers, shopkeepers, and consumers to be labeled as criminals under federal law. Fair point there, Justin. All told, the Safe Banking Act now has 37 Senate co-sponsors, plus Merkley as the chief sponsor. That's more than a third of the chamber's membership. The House already passed its version of the bill along largely bipartisan lines last month. When the Senate might take up this measure is another question, but I want to remind you all that there's plenty of time. There is a lot of time, and the Safe Banking Act is no longer a matter of if, it's just a matter of when. And hey, pay me now or pay me later, this is going to happen. So as an investor, it does not even bother me. I'm just chilling. And I want to highlight this from the earnings call with Curaleaf, and what their chairman, Boris Johnson, ended up responding to a question. So Pablo Zuanic, an analyst, asked on the conference call for Curaleaf, "Can I ask a quick follow-up and maybe just a broader theme for Boris? There's a lot of talk in the industry about lobbying power of MSOs, and we hear that the alcohol and tobacco lobby are much stronger at the federal level. I wonder if you have any thoughts on that in terms of benchmarking MSO lobbying power versus tobacco and alcohol? I know it's a very general question, but if you can give color to it, it would help. Thank you. So Boris responds, yeah, thanks, Pablo. I will tell you that the MSOs are organized in Washington. We're working together through the USCC, and we recently tried to get MSOs together on a very specific initiative around safe banking. We're in the process right now of having separate calls. We've had several group calls. We're now having separate calls. We're raising money in order to create a fund in order to continue our lobbying efforts in Washington. I think we've got one shot before the midterms. As soon as Schumer's law drops, we've got really one shot to get this through. Now, need I remind you, the midterms is November of 2022. It's May 14th, 2021. There is so much time. So remember to breathe, keep calm, and trust that these people are working to get the job done. And I want to make sure that this sector is very well prepared for it. So we're currently raising funds in order to be able to make sure this is outside of the normal funds that we use to fund our efforts there. This is additional funds to make sure that we can try to get regulatory change in Washington. Now, as I said in my overall statements of Schumer believes that if he puts safe banking, which surprised us a little bit, but he believes that if he puts safe banking to a vote in a vote in a Senate, it would pass, but he wants to get much more than just a thinking. And I just want to highlight that these are direct quotes word for word from people talking, so that's why reading through it is not as just straightforward and coherent and clear. But last thing to highlight, he thinks he's got one shot at this with the Republicans, so he's putting a much broader bill. The reason for the recent holdup we learned today is that Schumer is in discussions with the FDA about what their role would be in federal legalization. And so that's what's currently holding it up. But we do expect that to drop sometime in May, which is Schumer's complete comprehensive reform bill. I want to repeat that. That's currently what the holdup is, him talking with the FDA, but we do expect the law to drop sometime in May. At least that's what we've been told by his and Booker's and his people. And Pablo responds saying, great, thank you. And so as investors, there are a few things we got to focus on. Mainly fundamentals, making sure that the plan you've made is still sound and that the company you're invested in continues to execute as they will, justifying your long position, but also following the money. Cannabis legalization and reform is going to bring a ton of wealth to the United States, which is why investors and banks want SAFE to pass so that they can get in, and which is also why we've even seen Republicans like the Koch brothers starting to sponsor this. We're seeing tobacco and alcohol get involved because they see the benefits of legalizing. Everyone sees the benefits of legalizing. The American people are voting with their dollars. The only ones that don't are the politicians. And so need I remind you that incremental reform, which does involve the SAFE, is not a matter of if, it's just a matter of when. So do your best to be patient. Again, if you've got cash, this is the best time to start getting in. And just know that, hey, we are on the upside, on the upswing, I believe, despite the share prices. It doesn't matter what happens. The lower they go, the better opportunity for you to buy on sale. So that is it for this week's episode, everybody. If you enjoyed this video, please leave a like on it. Subscribe below if you don't want to miss any future videos. And I will catch you on Sunday for This Week in Cannabis. Have a great day, everybody.